Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to discuss about the new guidelines about KYC rules for banks. The Reserve Bank of India (RBI) has modified the KYC rules for banks. RBI has added a new guideline in the KYC circular. Today's banking environment places strong emphasis on both customer convenience and regulatory compliance. In line with this objective, the Reserve Bank of India (RBI) has introduced important clarification in its Know Your Customer (KYC) directions relating to the Central KYC Records Registry. These revised guidelines clearly define the responsibilities of banks and other regulated entities when customer KYC records are uploaded, updated, downloaded, and relied upon. The purpose of this presentation is to explain the new RBI guideline in simple language, highlight its practical impact on banks and customers, and ensure correct understanding of accountability under the KYC and anti-money laundering framework. The Reserve Bank of India (RBI), through its updated KYC directions, has clarified how responsibility is shared among regulated entities with respect to customer KYC records maintained in the Central KYC Records Registry. As per the revised guideline, the regulated entity that last uploads or updates a customer's KYC information in CKYCR bears full responsibility for verifying the customer's identity and/or address. This verification must be carried out strictly in accordance with the provisions of the Prevention of Money Laundering Act 2002 (PML Act), the Prevention of Money Laundering Rules 2005 (PML Rules), and RBI's KYC directions. Once the customer's KYC information is available in CKYCR, other banks or regulated entities may download and rely on the same records for onboarding or servicing the customer. In such cases, the downloading bank is not required to re-verify the customer's identity or address, provided the CKYCR data is current, complete, and compliant with regulatory requirements. This provision helps avoid duplication of KYC processes, reduces customer inconvenience, and enables smoother and faster onboarding across financial institutions. However, this relaxation is limited only to identity and address verification. The bank or regulated entity that downloads and relies on CKYCR data continues to remain fully responsible for all other aspects of customer due diligence. These include customer risk assessment, understanding the nature and purpose of the business relationship, ongoing due diligence, transaction monitoring, identification of suspicious activities, and compliance with AML or CFT obligations. In simple terms, the RE that last uploads or updates KYC in CKYCR is responsible for verifying identity and address. Other REs can rely on this verification and need not repeat it. And overall responsibility for customer due diligence and AML compliance always remains with the bank currently dealing with the customer. CKYCR should therefore be understood as a mechanism for KYC reuse and efficiency and not as a transfer of regulatory responsibility. What does this RBI KYC guideline mean? When a customer's Know Your Customer KYC details are uploaded or updated in the Central KYC Records Registry, the primary responsibility for verifying the customer's identity and address rests with the regulated entity that last performed this update. In practical terms, this means that the bank, NBFC, or other financial institution that most recently conducted the customer's KYC and uploaded or modified the details in The details in CKYCR must ensure that the verification was done correctly, completely, and in line with all regulatory requirements. This responsibility includes confirming the customer's identity documents such as Aadhaar, PAN, passport, etc., and address proofs are genuine, valid, and belong to the customer, and that the verification process complies with the Prevention of Money Laundering Act 2002 and the PML Rules 2005 and RBI's KYC directions. If there is any error, misrepresentation, or non compliance in the uploaded KYC data, accountability will lie with the RE that last updated the records in CKYCR. Once these KYC details are available in CKYCR, other banks or regulated entities may download and rely on the same KYC records for onboarding or servicing the customer. Such entities are not required to verify the customer's identity or address provided the CKYCR data is current, complete, and compliant. This approach avoids duplication of KYC checks, reduces customer inconvenience, and enables smoother movement of customers across financial institutions. However, it is important to note that while the downloading RE can rely on CKYCR data for identity and address verification, it continues to remain responsible for all other aspects of customer due diligence. This includes assessing the customer's risk profile, conducting enhanced due diligence where required, monitoring transactions, ensuring ongoing KYC updates, and complying with AML or CFT obligations. In simple words, the RE that last uploads or updates KYC in CKYCR is responsible for verifying identity and address. Other REs can trust this verification and need not repeat it. Nevertheless, every RE remains fully responsible for overall customer due diligence and regulatory compliance. This clarification strengthens accountability, improves efficiency in the financial system, and supports RBI's objective of a standardized, reliable, and customer friendly KYC framework. Once a customer's Know Your Customer KYC information has been successfully uploaded in and is available in the Central KYC Records Registry, the same customer need not undergo the full KYC verification process again each time they approach a new bank or regulated entity. Any other bank, NBFC, or financial institution may download and rely on the KYC records already stored in CKYCR for the purpose of onboarding or servicing that customer. In such situations, the bank or RE downloading the KYC information is not required to independently re-verify the customer's identity and or address, provided that the records obtained from CKYCR are current, complete, and compliant with the requirements laid down under the Prevention of Money Laundering Act 2002 and the Prevention of Money Laundering Rules 2005, as well as the RBI's KYC directions. The assumption is that the regulated entity which last uploaded or updated the KYC information has already performed the necessary verification and bears responsibility for its accuracy. This regulatory provision significantly reduces duplication of KYC checks, such as repeated submission of identity and address proof, and minimizes customer inconvenience, especially for customers who maintain relationships with multiple financial institutions. It also improves operational efficiency for banks by saving time, reducing costs, and ensuring uniformity in KYC standards across the financial system. At the same time, reliance on CKYCR data does not dilute regulatory oversight. While re-verification of identity and address is not required, the bank downloading the KYC records continues to remain responsible for all other aspects of customer due diligence, including customer risk assessment, transaction monitoring, and ongoing due diligence as prescribed by RBI. Overall, this mechanism promotes a standardized, reliable, and customer friendly KYC ecosystem while clearly defining accountability and ensuring continued compliance with AML and CFT regulations. It is important to clearly understand that the relaxation provided by RBI is only limited to not repeating the verification of the customer's identity and address when KYC records are downloaded from the Central KYC Records Registry. This means that while the bank can rely on the identity and address verification already done by another regulated entity, this does not mean that all KYC responsibilities are transferred or reduced. The banks that downloads and uses the KYC data from CKYCR continues to be fully responsible for carrying out all other customer due diligence requirements. This includes assessing the customer's risk profile such as low, medium or high risk, understanding the nature and purpose of the customer's relationship with the bank and deciding whether any enhanced due diligence is required. In addition, the bank must continuously monitor the customer's transactions to ensure that they are consistent with the customer's profile and do not indicate suspicious or unusual activity. The bank is also responsible for ongoing due diligence, which includes periodic KYC updates, reviewing customer information from time to time, and taking appropriate action if there is any change in the customer's risk status or behavior. Further, the bank must ensure that full compliance with all other requirements under RBI's KYC directions, including AML and CFT obligations, reporting of suspicious transactions, record maintenance, and adherence to internal policies and procedures. In simple terms, only identity and address verification can be relied upon from CKYCR, and all other KYC and compliance responsibilities remain with the bank. The bank is fully accountable for monitoring, risk assessment, and regulatory compliance throughout the customer relationship. This approach ensures customer convenience while maintaining strong regulatory control and accountability. In simple terms, even though a bank is allowed to use the customer's identity and address details already available in the Central KYC Records Registry, this does not mean the bank can pass on or avoid its responsibilities related to anti-money laundering compliance. The use of CKYCR only helps the bank avoid repeating the basic identity and address verification that has already been completed by another regulated entity. The bank that is currently dealing with the customer must independently carry out all other checks and controls required under the law. This includes keeping a close watch on the customer's transactions, understanding whether the transactions match the customer's profile and declared purpose, and regularly assessing the customer's risk level. If any transaction appears unusual or suspicious, the bank must take timely action and report such activity as required under AML regulations. In other words, CKYCR is a shared KYC database, not a transfer of responsibility. It makes customer onboarding easier and faster by allowing reuse of verified identity and address information. However, the bank that maintains the customer relationship remains fully accountable for ongoing customer due diligence, monitoring, and compliance with RBI's KYC and AML rules. To sum up simply, CKYCR helps avoid repeating identity and address checks. It does not remove the bank's responsibility for AML compliance. The bank must still monitor transactions, assess risks, and report suspicious activity. And overall responsibility for customer due diligence always stays with the bank currently serving the customer, except for the limited verification already done by the last entity that's updated CKYCR. This ensures both customer convenience and strong regulatory control at the same time. In conclusion, RBI's clarification on CKYCR brings greater transparency, efficiency, and accountability to the KYC framework. By allowing banks to rely on already verified identity and address information, the guideline reduces duplication, saves operational time, and enhances customer experience. At the same time, it clearly reinforces that AML compliance, customer risk assessment, transaction monitoring, and ongoing due diligence remain the sole responsibility of the bank maintaining the customer relationship. This balanced approach ensures that both regulatory robustness and customer convenience, supporting RBI's vision of a standardized, reliable, and risk based KYC ecosystem. Disclaimer: this presentation is intended for general awareness, training, and educational purposes only. It is a simplified interpretation of RBI's KYC directions and related regulatory provisions. While due care has been taken to ensure accuracy, this content should not be treated as a substitute for the original RBI circulars, KYC directions, or applicable laws and regulations. Banks and regulated entities are advised to refer to the latest RBI notifications, internal compliance policies, and seek professional or legal guidance where required. The presenter assumes no responsibilities for the decisions taken based solely on this material. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.